As the joint hearing began, lawmakers like Senate Rick Scott and Chairman John Molinar set a charged tone, warning that the Chinese Communist Party had infiltrated American capital markets. Kevin O'Leary's testimony turned the room electric. His blunt claims about golden shares and fake ownership structures hit nerves across both parties. Senators and House members clashed not over ideology, but over urgency, with Gillibrand voicing concern for seniors, while others demanded action against CCP-linked corporations.
I want to be clear about the threat here. If you have your retirement invested in anything that is controlled by or under the jurisdiction of the Chinese Communist Party, you are at risk of losing every dollar.
The truth about TikTok is, and I'm aware of this and many others in the social media industry and the software and AI industries know this, TikTok is weapons-grade spyware, period. 100% he has a golden share. There's no other way this deal's getting done. And I think that's the case for hundreds of companies that have raised capital in the American markets. He will personally decide. You may not like that. I certainly don't. But I respect it to be a fact. And I know I can't do this deal, or anybody can, without his decision on what the structure is going to be. And the laws currently here allow for the Chinese to own up to 19.9% of this. It's a media company. These laws are already in place.
The FBI indicates that seniors are disproportionately affected by frauds and scams, with over $3.4 billion, billion with a B, in scam-related losses for individuals 60 and over in 2023 alone.
So we will now come to order. First, let me welcome our colleagues from the U.S. House Select Committee on the Chinese Communist Party. I want to thank Chairman Molinar and Ranking Member Krishnamoorthi for joining myself and Ranking Member Gillibrand for this incredibly important hearing. The U.S. Senate Special Committee on Aging is charged with examining any and all matters pertaining to the problems and opportunities of older people. In 2020, the Holding Foreign Companies Accountable Act was signed into law by President Trump, which mandated that if companies in Communist China did not comply with U.S. auditing standards for 3 consecutive years, they must, not maybe, they must be delisted and banned from trading on American exchanges. This law was amended in 2022, reducing the consecutive years of noncompliance from 3 years to 2 years. But unfortunately, under the last administration, the SEC failed to enforce this law. And today, many Chinese companies, including Yum China, Alibaba, and Baidu, are still listed on American exchanges in clear violation of U.S. law. This is a perfect example of why your money is not safe when investing in companies tied to Communist China.
Thank you for inviting me to participate in today's important hearing. I want to use my opening statement to shine a light on an issue that impacts millions of American investors, many of whom have invested their retirement funds in the equity markets. The threats posed by the Chinese Communist Party I will discuss today impact anyone and everyone like me who has tried to do business in China, everyone that invests in the stock market, anyone that invests in passive investment vehicles like international index funds or mutual funds, any retail investor that invests in Chinese companies, anyone who invests internationally in emerging markets like China, and everyone with a 401k plan or pension invested in international index funds. I have nothing against the Chinese people. Their contributions to science and art over the millennia are well documented. It's their government I take issue with. In my opinion, since joining the WTO in 2000, the Chinese government has never played by its rules. This has led to the CCP to passing various laws in the realm of cybersecurity, espionage, intelligence, and beyond, and other mechanisms to control its corporations, industries, and business partnerships, all to the detriment of U.S. investors. This is not a new phenomenon. It has been part of the long game China's been playing for decades. Let me just elaborate briefly on a few reasons why the time for us to address this matter is today. In its desire to reduce state-run companies and their holdings in them, the Chinese government divested itself from them. However, in return for taking a 1% share in the company, the government is granted a seat on the board, voting power and influence over all business decisions. It's effectively a super voting right. This is the so-called golden share that she is using today to control the potential sale of TikTok. If China maintaining control of companies wasn't bad enough for investors, China prevents foreigners from owning Chinese companies. Instead, they're cleverly exploiting the U.S. financial system creation of variable interest entities, VIEs, to approximate the ownership of corporate shares. If you own stock in a company like Tencent, Alibaba, or ICBC, you don't actually own stock in a company. You own a share of a contract of something in the Cayman Islands that is trying to approximate stock ownership. The U.S. has given China preferential treatment for over a decade through its own special memorandum of understanding that governs accounting standards and oversight. This sweetheart deal with the Public Accounting Oversight Board, the PCAOB, has allowed China to continue to game the U.S. financial system via their special treatment that is not afforded to other countries, even our allies. This is a completely unbalanced and non-reciprocal situation. And why do we allow this? How can this be viewed in any way as fair to American investors? There should be complete parity between the U.S. and China. I believe Congress should act to delist CCP-affiliated companies until there is a parity of treatment for Western businesses in China. If we can't own stocks in their country, they should not be allowed to own stocks in the U.S. Unless businesses can operate in China with the same freedoms that Chinese businesses have here, we should not let their businesses operate in the U.S. We should exit China's marketplace until the CCP makes significant reforms. We should demand that all Chinese companies engage in U.S. markets complied with U.S. accounting standards.
Let me start with Mr. O'Leary. So can you explain this idea that Chinese companies, American can buy into make an investment in a Chinese company, and we have no idea whether their financial statements are accurate because they don't have an obligation like American companies do to comply with general accepted accounting principles. And our SEC has not enforced rules which would require any American company to comply, but not for whatever reason Chinese companies don't have to. And what's the risk to an investor?
No transparency. Regulations in the U.S. and the regulatory environment and the bodies that enforce it have created the most successful capital markets on earth. More than half, or almost 60% of the world's capital is invested because of the rules put in place for transparency and appellate courts and everything that makes these capital markets work in the United States. And yet somehow, and I'm calling foul as an issuer of securities that's forced by these regulations that I abide by for obvious reasons and I want to be compliant, but I also have to bear the escalating costs each year, which are millions of dollars to be compliant. And yet I look right beside me on a listing and I see a Chinese company that is completely ignoring these regulations and suffers no outcome at all. There's no consequences. And I understood the law gave them 36 months for compliance, and then it was adjusted down to 24 months, and still they're listed, and still I have to compete with them to raise capital, and they don't even have to pay the compliance costs. I mean, what's wrong with this picture? How can this possibly be going on? And I'm so excited that finally this is getting national focus. This is absolutely outrageous and unfair. And we're letting them take this capital that they raise in these markets, that we can't do the same thing there, we can't litigate there, we can't protect our IP there. They use the courts, the American court system, to litigate my companies after they steal the IP and knock the product off. And I can't do anything about it except come here and say, wake up. Like, this has got to stop. It's got to stop, and they have to pay the consequences. There has to be consequences. I would be in a federal jail doing what they do in terms of not being transparent on their quarterly statements. There's no way this can go on.
So the Securities and Exchange Commission requires a company that wants to sell stock to the public to provide disclosure of anything that's material. On top of that, they require them to give audited financial statements, right?
Right.
And that's what you have to do. Right.
And I also have to disclose if I have a super preference share. It has to be disclosed that one individual controls the entire outcome of the board and the company. Who would want to invest in a company like that? Do you think I could raise any money if I disclose that? As I have a golden share in my structure that only I can decide all outcomes on every single issue? The board is irrelevant. That's basically what that share is. Could I even compete? And I bet you there are hundreds of companies that have not disclosed that, listed in America today on the NASDAQ and the NYSE. Why are they trading? I can't do that. How come they can? They got to be, listen, if you think that's okay and you want to invest in a company where one individual has a super golden share, go ahead. The chances you go to zero are very high because that person may not have any governance or any momentum or any consideration of the rest of the shareholders. That's why we don't allow this here. And that's why we're the most successful capital market on earth, because investors feel confident there are no golden shares on the balance sheet, because the board would enjoy time in a federal prison if they tried that. And we don't do that to the Chinese, and it's just got to stop.
So number one, they're not complying with SEC rules. Number two, they're not complying with exchange rules. And number three, anybody that's taken them public, all right, they can't comply because they can't disclose anything material because there's not enough information, right?
Why wouldn't you put consequences on those that facilitate this? I would love to pour boiling oil over my competitors that are not being compliant. That's why we have competitive markets. I know what the rules are. If I want to do a listing, I want to raise capital, I want to do an RTO, whatever it is, I know what the rules are, and I cannot be non-compliant. Yet, I'm competing with companies that go after that same dollar from the investor that are totally opaque. That's just wrong. And I'm happy to come here and scream about it. Happy to do that. I'm happy that we're having this narrative.
You know, we're here to explore today the risky business of investing in Chinese companies, and it's an area where you have some experience as a potential purchaser of TikTok. And TikTok, as you know, is one of the most prominent Chinese companies on the planet. And when you were putting together your TikTok bid, what sorts of national security and legal risks were you most concerned about, and how did those risks affect the bid that you constructed?
The truth about TikTok is, and I'm aware of this, and many others in the social media industry and the software and AI industries know this, TikTok is weapons-grade spyware, period. It's one of the best propaganda machines I've ever seen. And if you want evidence of it, go on in the last 24 hours and look at the videos generated there through AI of overweight Americans at sewing machines, even the president himself depicted here, or over iPhones screwing in screws with the message, "Let's make America great again." I have never seen such blatant propaganda. And that's why, in this situation, this law was written. And it's very specific, and this is before the Supreme Court 9-0 ruling about redefining what these laws said regarding the algorithm. What it says is we cannot, any interested syndicate that wants to buy this cannot use the algorithm. That's the plain language. And then further defined with higher resolution on the top paragraphs of page 5 of the 9-page ruling from the Supreme Court, 9-0, very definitive, no algorithm. Now, many syndicates have been formed with the idea of leasing the code, leasing the algorithm, buying the algorithm, fixing it, putting it on an American server. What everybody was looking for in the capital markets was a definition of whether this was even possible. Would you write an indemnification? Would you put that indemnification in the Reconciliation Act and attempt to get 51 votes? Would you go back to Congress to change the law and get 60 votes to allow an indemnification for the buyer to survive into the next administration? Because the penalty is $5,000 per 24 hours per account. That's $80+ billion a quarter. Nobody's going to do that unless they're indemnified. And I've understood today from Senator Cotton that's off the table. Now we have clarity. Whoever is going to buy TikTok is not going to buy the algorithm, period. That's clear. And I think that's great that you've done that because it makes the competition much more in focus. And do I want TikTok to survive? Yes. I'm an advocate, as you know, for small business in America, companies between 5 and 500 employees, very successful platform. Over 7 million families make their living on TikTok. It's the lowest customer acquisition cost vehicle in America. It's a great competitive product when it's used properly. I'd love to be part of the syndicate that buys it. There's no question about it. But I'm also an advocate for these small businesses because they create 62% of jobs in America. They are the American economy. I'd like to see this product survive. Happy to play by the rules, 100%.
Can I just follow up with you? You talked about the golden share, and I'd like to hear a little bit more about that. And relative to TikTok, does Xi Jinping have a golden share in ByteDance?
Ask yourself why, when we're talking about buying TikTok, we're not talking about the shareholders of the company that own it called ByteDance. They seem to be irrelevant in this negotiation. There is only one narrative that matters. Every buyer knows this. What is President Trump, going to do with Xi on TikTok? 100% he has a golden share. There's no other way this deal's getting done. And I think that's the case for hundreds of companies that have raised capital in the American markets. He will personally decide. You may not like that. I certainly don't, but I respect it to be a fact. And I know I can't do this deal, or anybody can, without his decision on what the structure is going to be. And the laws currently here allow for the Chinese to own up to 19.9% of this as a media company. These laws are already in place. I'm happy to work with this deal, as every syndicate would be, as long as it's compliant. But does Xi have a golden share? 100%. He alone will decide.
Thank you, Chairman Molinar. Now I'd like to recognize Ranking Member Gillibrand for her opening statement.
Thank you, Chairman. It's a delight to be here. Thank you to our witnesses. This is a very hot topic in New York. I want to thank my Republican House members and my Democratic House members for joining us. This is so much fun. We should do this more often. I'm grateful you're here. And I'm sure all of us have been hearing from our seniors quite a bit. This has been a very tough time for seniors. The stock market's ups and downs, losing over $1 trillion of wealth over the last few weeks. It's very anxiety-provoking for so many seniors. They worry about the fact that when they go to the Social Security Administration, they can't make a phone call to them. Their phone calls aren't returned. They're on hold for 5 hours. Multiple stories, problems with getting online access. Just the list of worries go on.
First, pig butchering is a scam named for the way it lures victims in, fattens them up, gains their trust, and then drains their finances. In many cases, a scammer poses as a family member or friend urgently in need of money. In others, a scammer uses fake identities to get romantically involved with unsuspecting victims, such as older adults. Once the victim's trust is earned, the scammer asks for money or suggests investing through a fake app that drains the victim's finances. Take this story, if you look at the video from just outside my district, of a woman who lost almost $1 million to a scammer using pig butchering.
Her husband passed away decades ago, and recently Damask met a man online.
He said he loved me. The second time I sent $35,000.
Over time, that money sent reached nearly $1 million. Damask says the scammer told her she would get double her money back in his investments. Instead, she now owes money back to her bank, cash which she took from her home equity loan.
Now, my second point, this is not just a financial issue. It's a human rights issue and a national security concern. According to the U.S. Institute of Peace, cyber scamming in Southeast Asia, mainly Burma and Cambodia, is driven by Chinese gangs and generates almost $44 billion annually. Weak law enforcement and corruption in this region have also allowed gangs to traffic people from 70 countries, including Americans, into this illegal scamming industry. As USIP has pointed out, this scamming industry is so vast and so lucrative that it now parallels fentanyl as one of the top threats posed by Chinese criminal networks to the United States. My staff actually received a scam text this week. I'm not joking, which we can see here. And it starts with a simple hello. Many of us just delete or not respond when we get texts like this one. In this case, though, we decided to respond to better understand how these scams work. Within minutes, we received a WhatsApp link and pictures of a woman who said her name is Daisy. Here she is, and she says, "These are all my travel photos from different countries. Every time I travel, I can meet all kinds of people and things." Daisy then goes on to compliment us, saying, "You're welcome. You give me the impression of a kind, friendly, polite, and well-mannered man. I can feel the warmth when chatting with you." Over the course of just 7 hours, our dear friend Daisy asked for an investment, and my staffer asked how much she needs. She responded, approximate investment of $10 million to $30 million. Money that Daisy would happily walk away with. It's dangerous scams like these that are preying on older Americans. Third, and my final point, there's more to this story than just Chinese gangs operating in the shadows. These groups, these gangs, are directly tied to the Chinese Communist Party. This is Wan Kwok Koi, a.k.a. Broken Tooth. a Chinese businessman, or more accurately, a mafia boss, who is behind a scam compound tied to the CCP. Broken Tooth's public motto is, quote, "I used to fight for the triads, and now I fight for the Communist Party." Another gentleman behind another scam city, seen here with a Burmese warlord, is Shi Zhejiang. He is wanted in China for financial crimes, but his ties to the CCP allowed him to operate freely for years before being detained by Thai authorities. China now seems to be taking some steps to reckon with this issue, but it's too little, too late. Like the fentanyl issue, the CCP turned a blind eye and has allowed this to happen. The CCP must recognize its role in allowing gang bosses and scam centers to absolutely run rampant. The financial and human cost of these scams is enormous, and we must act now to protect older Americans.
Thank you, Mr. O'Leary. Now I'd like to welcome Christopher Icavella. He's the president and CEO of the American Securities Association. He serves as the leading voice for financial services policy. He has worked as special counsel and policy advisor to Commissioner Scott O'Malia at the U.S. Commodity Futures Trade Commission. Thank you for being here, and I look forward to hearing your testimony.
Thank you. I'm grateful to the chairs, ranking members, and members of each committee for the opportunity to testify today. My name is Christopher Icavella, and I'm the President and CEO of the American Securities Association. Today, I will discuss the risk the CCP poses to American investors and to our national security. While it was widely believed that the free flow of global capital to communist China would liberalize its political and economic systems, that's not what happened. In fact, the opposite occurred. Beijing used the openness of the international economic system to exert geopolitical leverage over the U.S. and our allies. Rather than liberalize, the CCP has been engaged in a multi-decade, multifaceted political, economic, and military strategy to achieve, quote, the great rejuvenation of the Chinese nation, end quote. The goal is to create a new world order through economic coercion and manipulation while avoiding a hot war. This has left the world less open and more authoritarian. To implement this strategy, the CCP needed capital, and that's where Wall Street comes in. For over 2 decades, Beijing has used Wall Street to penetrate our capital markets and fund its rise. In exchange, Wall Street received huge fees and access to the Chinese market. It's this quid pro quo that directly threatens America's economic and national security. The partnership works like this. First, Wall Street spins a narrative about emerging market returns and the China opportunity. Then it sells Chinese companies to American investors on our exchanges. After the IPO, the money goes to China, and Wall Street continues propping up these companies by putting them in stock index funds, touting them in financial media, and lobbying Washington to maintain the status quo. To raise money on exchanges, companies used a novel legal scheme called the variable interest entity structure. This scheme allows a Cayman Island shell company that contracts with a mainland Chinese company to list its shares on our exchanges. American investors have no equity or voting rights in the shares of the Chinese company and very little legal protection. We joined the Select Committee in asking Congress to end this legal fiction and delist every VIE from the exchanges. After the VIE scheme was scrutinized, the CCP needed a way for Americans to buy mainland Chinese companies listed on mainland Chinese stock exchanges. So Wall Street used what I call the passive index loophole, which allows these companies to be included in international, emerging market, and China-specific index funds like A-shares. This loophole has funneled billions of dollars in American savings to Chinese companies while allowing them to avoid all of the disclosure, financial reporting, and audit requirements American companies must comply with to sell stock to American investors. As the Select Committee found, this loophole also exposes American investors to Enron-like frauds, Chinese military companies, and companies that support egregious human rights abuses. It must be closed. The Select Committee also found that numerous Chinese companies on our exchanges and index funds are on government prohibition lists. A company goes on one of these lists if it's a threat to our national security, foreign policy, or economic interests. There is no policy basis for any company on these lists to access our markets. And we recommend that an entity placed on one government list should be placed on all lists and automatically allow the Treasury Secretary to delist and de-index these companies from our public capital markets. Because China operates as a party state, this raises another important policy question. How does the CCP use American money? Unfortunately, American investor money is used to fund the emission of more greenhouse gases than every developed country combined. PLA weapon systems, a cyber army that relentlessly attacks us, subsidies for Chinese companies who dump their goods into our market, and sickening human rights abuses. The people of America want this to stop, but unless Congress makes the funding of the CCP illegal, it won't. The final issue I want to talk about today is fraud, which has gone from an individual criminal act to a lucrative business opportunity funded by state-sponsored actors across the globe and in China. Americans lost $158 billion in 2023 and are estimated to lose billions more as generative AI fraud evolves. Every day, ASA members face scams from China that target their employees, their firms, and their customers. And while millions are spent trying to stop this, Americans who've been scammed know that if they can't get their money back before it goes to China, then it's gone. The government and the private sector have an obligation to work together to stop this avalanche of fraud from continuing to harm Americans. To conclude, Communist China doesn't play by the rules, and it's time for us to revoke the privilege we gave them to play in our game. This isn't a left-right issue or a red state, blue state issue. It's an American issue. And now we need a united Congress to take action to protect this country and our people from the CCP.
Americans deserve to know whether their capital is being used to fuel the very threats we're trying to guard against. And they trust us to take action to keep their investments safe. This hearing isn't just the end of the conversation, it's just the beginning.
By the end, the tension was palpable. Rep. Raja Krishnamoorthi's pig-butchering revelations, backed by live deepfake scams and AI-driven deception, left the chamber stunned. The discussion spiraled from financial risks to human trafficking and digital warfare, forcing witnesses and members alike to face a chilling truth. America's retirees and investors are being hunted in the same global web of exploitation. As Chair Scott adjourned, no one looked certain that Congress was ready for the scale of what had just been exposed.